It's time for another update on the biggest name in artificial intelligence, Nvidia, the makers of the graphics processing units that power AI. Unless you're living under a rock, you've heard the name Nvidia, and if you're a gamer, you've been familiar with this company for more than 20 years, as it is the maker of the best graphics cards for both PCs and some game consoles, including the Nintendo Switch. This week, Nvidia was going to report earnings and reported $6.7 billion in net income for the quarter, a 422% gain over the quarter of last year. In addition, Nvidia raised its guidance again from $12 billion to $16 billion. So beating on the top and the bottom line and giving even better forward guidance than was expected. What caused Nvidia to sell off? This is one of those events that's called a sell the news event. Everybody was really excited going into the quarter, and even though Nvidia did everything the bulls could hope for, that means it's kind of out of the game for right now. It's done as well as it can, and now we have to wait for the next quarter. And since it was already pretty inflated going in, it actually popped 10% in after-hours trading, but gave all of that back on Thursday to finish flat at only up 0.1%. On Friday, Nvidia's sell-off continued even more, as investors and traders took profits and or covered their longs as the Nvidia AI hype seems to have left the market. I've been a holder of Nvidia since 2016, so I've been in the stock for 7 years. And when I saw it pop in the after-hours trading, I do what I almost never do, and I took profits in after-hours trading. My sell order went through on Wednesday evening at $510.01, where I sold 7.07% of my position in Nvidia. This sale locked in 3,154.69% in gains on shares when I originally opened the position at $15.67 on September 6th of 2016. The sale also lowered my per share cost, $54.35, down to negative $259.30. In my portfolio, a negative per share cost means I've taken all the original capital out of the position, in addition to $259.30 per share of the stock I still hold. Nvidia remains the biggest position in my investments in play portfolio, but because I'm playing with the house's money and I have no investment capital risk, and I have a significant cash hoard of 43.96%. I've been letting Nvidia ride. In fact, even after this sale, Nvidia is still 7.76% of the portfolio, a portfolio whose maximum target allocation size is 7.14%. So I could theoretically still take more profits and still have Nvidia be a full allocation size. From here, my next sell target is $599.95, just below that $600 key psychological level. I'm not entirely sure that we can see Nvidia get there anytime soon, but that's where I'm going to take profits if we get that high. My next buy target isn't until $330.90, and some bulls may be really skeptical that Nvidia will ever pull back that far. My buy target for Nvidia is 35% lower than where I took profits. And you might think, wow, that is a huge sell-off. But in just the years that I've held Nvidia since 2016, the average sell-off is 41.45%. Just looking at the last couple of years, last year, Nvidia sold off 68.79% from its peak to its trough. In 2020, it sold off 42.88%, and in 2018, it sold off 57.47%. And that's not even accounting for some of the sales that happened in the great financial crisis and the dot-com bust. Since 2000, the average pullback from Nvidia's all-time high to its low before it makes a new all-time high is 53.5%. So a sell-off of 35% is actually nothing to be scoffed at. It's very likely. That being said, if I didn't already have a position in Nvidia and I wanted to get started, I'd probably go with a 20% pullback. And that would give us a buying target right around here, around $406.39, which we were just at a couple of weeks ago. Because this one is so volatile, I would buy in stages. I would not buy all at once. I might start with a 25% allocation or even less, and then buy in stages if Nvidia continues to sell off, which we might as we're heading into a very seasonally weak time for the year. From the summer highs to the October lows, the S&P 500 usually pulls back a minimum of 4%. But if you look at bigger pullback years like last year, it pulled back nearly 20%. If that happens, high flyers like Nvidia will get hit even harder. So more than a 20% pullback from Nvidia's all-time high is a very realistic target. That being said, I have been in Nvidia for 7 years. I have no intention of going anywhere. This is a long-term holding, it's a core holding, and I don't plan on doing anything with it for 20 years besides taking profits and adding to it. To follow along in all of the moves in all of my portfolios, as well as what I'm doing in Bitcoin, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe. It really does help the channel out. And I'll see you in the next video.